Hey everybody, Geoff Hyland here with the Hyland Group at RE/MAX Mountain Properties. Just want to provide you with your September 2022 market update. And a couple interesting things happened over the last 30 days. So I want to go through it with you right now. First and foremost, it appears as though our inventory, which was expected, has peaked. So to refresh your memory, we started September with 803 properties on the market. And just by reference, August was 753. October 1, what we saw is a grand total of 785 homes available. Now again, those are site-built single-family homes that are available in our entire MLS, which covers Prescott, Prescott Valley, Chino Valley, Dewey Humboldt, basically Cordes Junction to Ashford. So what I'm saying is that kind of to be expected, our market is very cyclical. Normally it peaks in August or September, and this year it appears to have peaked in September. Now from there, when we look at our demand, okay, so this is kind of indicative of what's going on not only in the economy but also with interest rates. Our number of homes that went under contract in September was 270. Now, if you compare that to September of last year, that number is down by about 26%. Our average days on market right now, MLS wide, okay, is sitting at about 40 days on market. So those numbers continue to stretch out a little bit, but here's the good news. For the last 3 months, we've been averaging right about 255, 260 escrows, new escrows per month. So if you're a seller, the good news is that there's still homes selling. All right, if you're a buyer, just know that homes are still selling and there are opportunities for you in this market. Now, what about values? This has got me a little puzzled, at least originally, okay? So when you look at the nationwide trends, what's happening is values are continue to kind of float down, but not as rapidly as they were, say, 2 or 3 months ago. What actually happened in our market in Prescott, now this is Prescott specific last month, is when you look at the graph, it shows that the Prescott site-built single-family homes actually went up 10%. That seems counterintuitive to everything that we're hearing. So I dug into the numbers a little bit more, and here's what I found. As far as I know, we had a record-setting month in September for this reason. There were 23 homes in all Prescott zip codes that closed escrow in 1 month over $1 million. And when you look at those 23 homes that closed escrow over $1 million in 1 month, the combined average was $474 a square foot. That is a big number. And because we don't have the volume of, say, our neighbors to the south like Phoenix, those numbers can really skew our market averages. There was one home, in fact, that closed at $1,450 a square foot, which is unheard of. When I dug into that, it was on 36 acres and it was only 900 square foot of livable space. So again, when I peel those homes out that sold in the luxury market in Prescott last month, what I found is that Prescott actually, it did have a slight uptick, but it was negligible, 1%. Okay, now when I look at the rest of the market, you know, overall MLS, Prescott Valley, Chino Valley basically stayed kind of stagnant. Overall did bump up just a few percentage points. Again, I think that's probably a weighted average with those homes that closed in Prescott. When you look at Prescott Valley and Chino Valley, they continued to float down, but again, just by about 1% or so. I want to talk a little bit about what I'm seeing and kind of hearing in the market right now. When you look at Phoenix, for example, their numbers continue to trend down. And I think that part of this is has to do with the buyer demographic that's purchasing homes, at least in Prescott. Some of this is speculation, but what I'm seeing is that the lower price points, okay, which lower price point is a relative term, right? When you talk 400, 450,000, that doesn't seem like a real low price point. But some of those homes are actually languishing on the market a little bit longer than some of the homes that are selling in that high end, that luxury market. Why? Well, I think that the buyers that are in that particular price point, by and large, are still having trouble getting to the financing. And what we're seeing is that there's very few entry-level homes that come available. There are some. We actually have some right now. We'd love to share them with you. But what I also think happened kind of simultaneously was kind of this perfect storm where the luxury market did see some reductions and there were buyers out there in anticipation that interest rates are going to go back up. Again, they're talking another raise before the end of the year, as well as another one in the first quarter of 2023. So what I'm seeing is that some of those entry-level buyers are still having trouble breaking into the market because right now the average interest rate is close to 7%. Now, if you look back on a historical average, from 1972 to 2022, the average interest rate was still over 7%. So from a historical average, we're still below. Now, I want you to know that if you're one of those buyers out there searching in that sub 4, sub 500 range, there are options available to you, okay? Rates change daily. That's number one. Number two is that you can also go out and ask the seller for some concessions to help you get that rate down. All right, so kind of an interesting month, but wanted to get it to you here. And if you have any questions, feel free to reach out, 928-237-4425. And again, it's Geoff Hyland with RE/MAX and the Hyland Group. Talk to you next month.